There it is. Thank you. My hero. Everyone who was joining in. Um, was that April? Is that how you say that?
Abril.
Abril is the hero who reminded me to how to click the record button. So now I'm going to share my screen and we're going to go ahead and get started. So if you're watching this on YouTube, don't forget to like, comment, and subscribe. Actually, everyone who's not watching this on YouTube, don't forget to do that too. You'll find the links in your emails. You got spammed like hecka in the last 24 hours, and there will be a little bit more, but I promise I will fade out and you guys will miss it. And then in 2 weeks, you will get another email, and it'll be a lot of fun. There's prizes in there. Okay. Welcome to your ABA investing workshop. We will start shortly. We are starting now. So smiles. I love smiles. And there's actually like 3 of you on my screen right now that I see. So everyone practice the smile real quick. That really does get me. There we go, Kristen. That was a nice smile. I love that. I love that. There we go. Now it got even better. I'm sorry to single you out, but like it was just a really good smile. Shout out to everyone else trying. Head nods, thumbs up. So on Zoom, you could click thumbs up, and that kind of lets me know that like, okay, you guys get it if it's like a tricky concept. What is aversive to me is going unmuted. So don't go unmuted, but I don't think that's going to happen. You guys are nice people. I could already tell by your smiles. So financialism, that's my Instagram tag. I've been posting there for a while, and somehow it actually got traction. I mean, I'm posting good content, so like you shouldn't be surprised, but we hit like sometimes even like thousands of people per week would follow me on there, and I was like, okay, I'm doing something here. My mom was like, yo, stay on the internet, you're doing something here. So that's what I did, and I've been doing it for about 2 years or so, where I got serious with it. And if anyone's interested in social media growth stuff, we could always talk. I love talking about that, especially with ABA people. And my birth name, my legal name is Georgie. So it's with an IY. My dad, that was the one thing that he gave me, my name and my last name. And then he left. Yeah, he said it would be a real popular name in the United States. I have yet to meet another Georgie with their name spelled like that, but okay, thanks, Dad. Hold on, disclaimer first. So trauma-informed stuff. ABA has been evolving recently, I'm still letting people in. So I will be pausing every now and then to let more people in. So trauma-informed, has anyone heard of this term? We see some smiles, we see some nods. Again, nods, very reinforcing for me. Love nods. So just in case you haven't, because again, like ABA is still growing, evolving. This means you're going in assuming there is some trauma involved. And we're talking about money. So I'm definitely coming in and assuming there is some trauma involved. Hold on, I'm still letting people in. There's got to be a way for me to let people in without stopping, but I will find that out next time. But anyways, obviously people with a little bit of money, a lot of bit of money, and anywhere in between. Actually, some people have so much money and they're still kind of really anxious about money. My mom could probably live off of everything that she saved up and invested, but she still has that kind of, I need this mindset. It's very scary for her to put her money into things like real estate or stocks, or let alone like crypto or NFTs, but she made a lot of progress. So I will respect that, and let's move on. This is me right over here. So I'm going to tell you a little bit about me before we get into like the meat. And if you're vegan, before we get into the veggie patty with no dairy. I actually don't eat any animals. It's been about 3 years, and food is very hard for me. Food programs, oh my gosh, don't get me started with food programs. I walk out. They did a food experiment on me. All the BCBAs gathered around, and they tried to get me to eat applesauce. It worked. I walked away with a whole lot of goodies because of that, and basically got my groceries from my clinical director. Anyways, we do fun stuff in our clinic. This right here is me. I've been doing ABA since 2015, which is the same time that I started investing in stocks. And I had no idea what I was doing. All I knew was this is how people get rich in the United States. They buy real estate or they buy stocks. No one says, I saved my way to $1 million. So I was like, okay, I'm gonna use that. I'm gonna just throw my money in. And as soon as I did, I was down like 30%. So a third of my money vanished. And I was like, oh my gosh, but I held on, I broke even. And then I was like, you know what if I use this stuff that I'm using with my clients on myself with money? And all of a sudden things started falling into place. And I was like, hold on. So the stuff that I'm making up based on the principles of ABA and applying on myself using schedules of reinforcement where like I don't deviate from that schedule no matter what is actually working. Interesting. And then I started reading personal finance books and I was like, well, they're saying the same thing just without ABA. And we noticed that across a lot of fields. So I feel like ABA is this objective language that is just straight to the point. And that's what I hope to like teach you guys, how you can tailor your ABA to this. Now, again, I'm not a financial advisor. And even if I was, I'm not your financial advisor, right? So there's educational purposes only. It's like if you're a BCBA and you see a kid having a tantrum on a plane, you're not their BCBA, right? Even if you have great ideas, it's probably not your place to tell people. This is a very individualistic thing. When people DM me on Instagram, hey, what stock should I buy? I'm like, look, I need your life story here. I need your goals. That's one myth that people don't get. There is no, I want to buy stocks. How do I get rich? It doesn't work that way. It seems like it works that way, but it doesn't. So that's me. One more fun fact is I come from the former Soviet Union. I was born after its collapse, but my birth certificate still says Soviet Union, which is very strange. It's probably a rare collectible. One day I will sell it when I need the money to buy more stocks, if there's a market crash or something like that. Okay, so let's move on. Chapter 1, Mo Money. You see what I did there? You see what I did there? Okay, thank you. If you guys just passed the exam or studying for the exam, wait a second. I have a question. Oh my gosh. Yes, I have a question for you guys right now. Thanks for the applause. Let me turn on my poll. I'm so glad I remember this. There's a stimulus prompt somewhere hidden in these, by the way. So I am launching this question right here. So describe you, take a few minutes. Okay, not minutes, take like 10 seconds. You guys can see this, right? I hope you can see this because so far I don't know. Oh, I have to end the poll. So, okay, I'm going to wait. I'm going to count to 10 while I close my eyes. So 1 Mississippi, 2 Mississippi, we're from California, 4 California, 5 California, 8 California, 10 California. I hope that was enough time. It wasn't, it was not enough time. 40% of you have replied. Let's go, guys. Let's go. I know you might be on the toilet. You might be mid-wipe, but this is it. This is it. Let's go. 57, 60%. Someone flushed. Let's go. I'm going to give 3 more seconds, 3 more seconds. I'm trying to get 100% here. 10, 9, 8, 7, 6, 5. We're slowing down. Okay, yes, someone stepped out of the shower, 63%. I am seeing this on a scale of, okay, so I have a thick portfolio. I love it. I love it. No one here has retired yet or living a work optional life. That makes sense. I was kind of expecting that, but last time there was one person. So I was very interested that I'm going to end this poll, and for people just hopping on, there will be more polls for you to answer. So end poll. And I'll just, I won't share these results, but I'll let you know that 68% answered there somewhere between 1 and 3, 32% are, I should have just shared the poll, 32% are somehow familiar. Let me just share these results. You guys can see this, right? There you go. Okay. So let's move on into the actual content here. Chapter 1, you guys missed my intro if you were late. Some people will not see the poll if you do not have your Zoom upgraded to the latest version. That's okay. It will be on YouTube. You'll probably be able to see it there. And if not, I am sorry. I actually uploaded my Zoom last night, or got the latest version. It's okay. So Casey and Sandra are new BCBAs, along with the power to help those in need. They also unlock a lot more power to help themselves. All right. Some people don't like helping themselves, but today that's what this is about. Casey and Sandra have a starting salary of $79,000. Now, depending on your location, this might be a lot, this might be too little. It's all relative, and especially with experience, salaries do increase, especially in the ABA world. So make sure you're doing that. Make sure you're looking around every now and then for that. So here we go. After their benefits, 401ks and all of that, essential expenses, right? They got $1,500 on rent, $300 on food, $500 on the bills. They even do charity and send some back to the former Soviet Union, and $500 in savings. So that means they spent about 3.2K. This is awesome because they wrote it out. They can see it. It's a visual. We know visuals help because we use visuals. And not for everyone. I actually hate visuals, but for most people, regular people, visuals do tend to help. Casey has a total surplus of $900 a month. We did the math. Her private events. I'm only left with $900 after all of that, right? She made like times 4 or a little more than times 4. She's going to enjoy this hashtag access. So she does. She goes to her favorite people. She sees them at least 4 times a week, to be honest. Target. And then she gets her favorite stuff, DoorDash again, finance a car and all that. Again, I'm not trying to shame anyone. If we're engaged in these behaviors, we engage in these behaviors, like more power to you. I'm just trying to make it a little bit more functional where maybe you can create an investing portfolio that could help pay for some of this stuff. Okay. Oh my gosh, she went to Disneyland too. Okay, that is a lot. That is a lot. Maybe excessive. But let's take a look at Sandra over here, who has a surplus of the same $900 a month. She says, I have a $900 left over. What should I be doing about it? There's a little prompt to myself. So let's see if I can get the next polling question in here. And it's okay if you do not have it. You can type in the answer below if you know that, if you feel, oh my gosh, this is not the question. I am messing up. Guys, please answer this one too. I'm just trying to collect data beforehand and then afterhand. So this is just for people who do not have the latest version of Zoom. This is a question about how you feel about your money habits. That's all. I'm just asking if you're nervous about it, you're anxious about it, you feel okay about it. Is this about Harry Potter? And you feel very confident with your money and your relationship with it. So we've got an actually pretty decent mix of response. It's really cool. More people are responding to this question. That's always interesting. So there we go. Some behavior momentum is happening. We answered that first one. And now, well, this is actually group behavior. We don't believe in group behavior, but we'll talk about that. We'll talk about that. I'm going to end that poll. I'm going to share results so people feel can see them. About 50% of people feel very nervous. So we're going to try to change that. So here's Sandra. I'm going to stop sharing this. And the stimulus prompt is, I'm going to do one more. Yes, here it is. So last poll question for a long time. Okay. This one is asking, what is the first thing we do with a new client? This is smart to do at the start of every session. So for those who feel like filling in the blank, you can just type it into the chat below. But it looks like quite a few people. Okay, I'm just going to stop this because a lot of people, 100% of people are saying it is a preference assessment and use the bathroom because it was a long drive. Yes. So let me share that real quick. Perfect. So yes, we do a preference assessment. How many of us do a preference assessment when it comes to our spending? We get our tokens. Who does a preference assessment? What do we actually like? Okay, that's good, right? That means there's room for improvement. All right. So that's the thing about ABA, and one of my favorite behavior analysts, Ogden Lindsley, he says, and this is a little judgmental, I guess he was a little tough guy, but he said, you are not a true behavior analyst unless you analyze your own behavior. Now, there's a lot of truth in that statement, right? We want to use these skills on ourselves because it kind of helps us with empathy, right? If we're using these skills on a very vulnerable population, I think one way to connect to them is to use it on ourselves. Okay, so here we go. Yes, a preference assessment. So Sandra does something different. She does a preference assessment to find out her values. What does she actually care about? And she likes all the same things. She likes DoorDash. She likes DoorDash again. She likes her Prada. She likes her Chanel. She likes her Sephora. I think there was a big sale like a couple months ago. I know my clinical director was talking about that. She likes her Tesla. She likes her alcohol, and she loves her Amazon Prime, which just raised a bunch of prices. But if you had Amazon stock, you got a 15% raise on the money that was invested in there. So that's pretty cool in a day. So no. By the way, fun fact, if you have Amazon Prime, you are probably spending an average of $1,500 a year on Amazon Prime. If you don't have Amazon Prime through Amazon, you're spending a fraction of that. I forgot the number, but I think someone here might know it. It is it's something like $500 or something like that. And you usually can qualify for free shipping. So I'm not saying Amazon Prime is a scam or anything like that. It makes things convenient, but maybe the convenience is the danger. So behavior hacks, ABA. After that first month of income boost after RBT Life, yes, thank you, Rosie. Casey and Sandra are now kind of starting to save money, starting to invest. So there's Casey. She continues with her saving behavior, and in 35 years, she has $210,000. Now, I know a lot of 50-year-olds. I know a lot of 60-year-olds that would love to have an extra $210,000. That's amazing. But you know what? They would love to have a lot more. And Sandra actually learned the skill of investing. So yes, she still saves her $500 a month in her bank account because emergencies do happen. People have kids and maybe parents, and you get injuries, especially in this field. You never know what can happen, and she does eventually get 6 months of expenses covered. Now that depends on your privilege. Me, I live at home with my mama. Don't tell anyone on the internet, and I get to save. I have basically, well, right now I have about 6 months actually covered, but traditionally I would have 1 or 2 months and I would invest everything. So I am saving up to move out because my mom's tired of me. But she starts investing about $700 a month. And once her expenses are all covered, she starts investing even more. In 35 years, how much money do you think she has? All right, just comment below, shout it out. And if you know, don't say nothing. Let's just watch. I know Rosie seems like really on top of this. So if you know, just do a little, just do a guess. Does she have $10 million? Does she got $1 million, 500,000? How much more would investing give her instead of the 210,000? Take a guess. Just like, let's work with what we got here, and then we'll break it down with realism. Okay. We got 1 million, 1.2, 1.5, kind of in the same ballpark range there. There's a cool study on humans and this concept of emergence. This is kind of outside the scope of ABA, where we have a lot of people guessing or estimating how many jars or how many beans are inside of a jar. One person will never get it right, but if like thousands of people guess and look and analyze from the distance, the answer will be way closer to the actual answer that's inside of the jar. So as long as we exclude outliers, and we definitely got some outliers here. So let's check it out. Oh, snap. Okay. Yeah. Sandra's living. She got 1.458 mil. Nice. And that is if we are conservative. We're also accounting for inflation a little bit here. And then if she does have the historic 10% returns, people argue about that 10% number is too good to be true. But I believe in the last 30 years, we had closer to like 15% returns, and 40 years is like 11% or something like that. And I know the stock market right now is a little bit dipping, but we good. We actually 4% from the very top. So, not a big deal. Okay. So here's my stuff. This is actually real right over here. This is what I did. And I was a BCBA for 2 years. Okay. 2 years is not a very long time, but I've been investing since my first paycheck. I worked 3 jobs. As soon as I finished UCLA, I was so depressed. I worked at a restaurant, and I already told you guys, I don't like I have a lot of food phobias, like ketchup sauce, pico de gallo. I learned a lot of new words in there, and it was very tough, but I feel like it prepared me for ABA, where we got usually children doing things that are very, very tough for them. And we're like, look, it's just ketchup. It's just ketchup. I still cringe at the thought of ketchup. Luckily, not a lot of people order ketchup at an Italian restaurant, but I left there as soon as the hatred built up to a certain amount, and I started going hard on ABA, joined my master's, and finished that. But this is what happened since my first dollar. Throwing it in. Again, there is some privilege. Live at home with my mom. At first, that was an accident. Now it's a strategy. Oh, my weekly report is available. So there we go. This is 1 day's change, by the way. 2.4K. Like I don't know how much ABA I do. I will never get 2.4K from ABA unless, there's ways. So I'm going to try selling some CEUs one day, but we'll see. Okay, enough showing off. ABA investing workshop. This is just a reminder to me that I stay on topic. I think we covered a little bit of this so far, but we're making great time. Let's check the time. We're making great time. Okay, chapter 2, tokens and time travel. Boom. This is the stock market. This is what it looks like. Very scary. People are like, oh, charts. Guys, I have 2 computers. You don't have to do this. It can be passive. Okay. It could be something that happens in the background. You walk away. A lot of days I don't check what's happening with my own stocks. It doesn't really matter. It's going to do what it's going to do. And I know over time, the odds are in my favor. And how much are they in my favor? We'll talk about that later. So let's try to define some stocks first. But first, one of my friends on Instagram, Delianne, she equated stocks to fruits. And I love that analogy. So here is a fruit. This is an apple. It's a fruit. So you think Apple is a business that's really profitable, but you don't got $2.8 trillion to buy the whole thing. Well, you do got $250. So you buy slices or stocks instead. They change proportionally in price as the company does itself. So if Apple is now, instead of 2.8 trillion, 4 trillion, then your $250 basically almost doubled to keep up with that. So that's pretty cool. And that's called the market cap. We don't need to know terms, but the market cap is all of the stocks combined. Okay. And that's based on a lot of different things. So sometimes it's profits a company makes, sometimes it's hype, and sometimes it's just people trading for the sake of trading. But ultimately, it's people buying more than people are selling. If that's happening, then things go up in price. And that's true for everything, not just stocks. You guys already know this. I don't know why you're here, but you are. Here it is. Here's my attempt to operationally define the stock market. And maybe not too behavioral. I probably would, none of these would pass the BCBA exam, but a collection of people's buying and selling behaviors measured in stock price. A marketplace where people click buttons to purchase or sell pieces of companies. That's what this is. Like that 100K profit thing that you saw a few slides back, that was just me clicking buttons on the keyboard. That's the behavior. And it's also a time machine or a token economy. And we'll talk about time travel right now. Here it is, token economies. Imagine you save up 20,000 tokens in 1990. In 2022, you can only trade them for 9,000 worth of reinforcers. That does not sound pretty good. What token am I talking about over here? But you know what token I'm talking about? It's the dollar. It's the dollar. So the dollar is losing value every single day. Now, it's not a linear drop down, but it is overall a drop down. That's why Coca-Cola in the 50s cost 10 pennies, and now it costs like $3 or $7 if you go to AMC. They are struggling. So the question, I'm just curious. There's some new research coming out, new talk. Do you guys like token economies? This is just for my own interest. Like, comment below. I was actually pretty against token economies. I'm like, I want to keep things as natural as possible. I don't want like this kind of stimuli interrupting things. Like, let's just get to it. But I am slowly rethinking my stance on token economies, because just like ABA, I'm always evolving. I do see the points for like keeping things very naturalistic, but you know, we're living in a financially run world. Money is an important concept. And if we could teach the most vulnerable population how to use tokens, and again, this is probably its own program for the sake of using tokens, I think that can go a very far way. So let's see the people who are brave enough to share their responses. We have overwhelming yes. Someone says not a fan, but we use it every day for ourselves, right? So there are some really cool talks about avoiding token economies. You guys could check out Greg Hanley. He's got free YouTube videos, by the way. I watch them all. ABA ASMR in the morning right now. This is ASMR. You guys watch ASMR? I get obsessed with that. Okay, so here's another here's another principle with tokens. Imagine you save up 20,000 in 1990. In 2022, you got 105,000. That's pretty good. Right. You can take these tokens as a gift for yourself, do what you want with it, or don't forget, you got to pay taxes, or you can think of it differently. So a lot of people think of money in terms of money, right? The people who want you to think this way are usually car salesmen, folks. We say salespeople now. I don't know the term, but the people who sell cars, they want you to think in terms of monthly installments for your car, right? They want you to think in terms of how much are you paying per month? And there's a reason why, because then you're not thinking about, well, how much of the car am I actually paying for if you're leasing? They just want you to think in terms of every month I'm paying a certain amount. There's a strategy to that. You're not thinking, oh, wow, I'm paying $30,000 on a $22,000 car. right? They don't want you to think that way. If they said it like that, if they framed it like that, you might think twice. You might get a used car. I got a used car. I used to lease. I leased for 6 years. I got a Lexus from 2005. It was really cool. It's still really cool. Knock on wood, it'll be cool for the next 400 years. And I am investing the difference that I'm saving. But there's people that want you to think in terms of percents. And when it comes to investing, that usually is the best way to think about it. You don't want to think about it like, I made $100. I made $2,400 in one day in the stock market. You don't want to think that way. You want to think, my investments grew by 6%. Why? Because you will be chasing money forever. And eventually, when you can think in percents, you can learn about the concept of compound interest, which we will hopefully have time to discuss today. But there's an even better, and the one place where you don't, a negative exemplar of when to not think about percents is financial advisors. Okay, now I love financial advisors, more power to them, but they will tell you managing your investments is going to only cost you 1%. Okay. And I was like, oh, 1%, that sounds good. Car dealership guy is like, okay, yeah, let's go. 1%. Okay. $300 a month, 1%. That 1%, if you're investing $500 a month, which we saw that is possible with BCBA income, in my opinion, at least, then over the span of 40 years, you would have given in that 1% fee about $900,000 to 1.1 million, which is about a third of your returns. I know 1%. That's why they say 1% instead of, yeah, this will cost you about $1 million over the next 40 years. Imagine they said that. Imagine car dealers said, yeah, this is going to cost you about 50% more than the car cost. So that's why they use percentages. They don't want you thinking in big numbers. Now, there's a lot of great financial advisors. There's probably a lot of great car salesmen. But this is the way that I like to think about investing. I like to think about it in terms of time. Right? I want to live a work optional life. I want the freedom to be with my family members and, you guys, and talking about, I actually love this stuff. So I want to open up time. Every time the stock market goes up, I'm getting PTO on PTO. And my goal is to have about $1.25 million one day, and that will be infinite PTO. And we'll talk about how that's infinite PTO because people get $1 million and they spend it fast. Without a behavioral plan, you're going to lose everything. That's why most people who are millionaires are actually self-made in the United States. There is a lot of privilege and it comes from inheritance, but most millionaires are now self-made. There's more self-made millionaires than ever before. And a lot of it is because of things like real estate and the stock market. And I think stock market's way easier than real estate, but I think Rosie might argue with me. I don't know. Okay, so here it is. I broke this down. We're assuming you're getting paid $55 an hour and you bought some Apple stocks. Maybe we should quit. We're going to skip that question for now. But the real thing is chasing reinforcement here is very, very dangerous. And we're going to break that down. But let's say an Apple stock, it literally says 172 and I wrote 179 right there. That is so interesting. You know what? I copied the percentage. That's what I did. I copied the percentage. You see that? Okay. Anyways, so if you invested, what is it? Brain fart, whatever, $26 less than 172 is into Apple, you basically got $62 as a gift. So you're like, okay, cool. For every share of Apple, I got $62. That's if you're thinking 62, it's 26. I'm doing things today. If you're thinking in terms of percents, which is a really cool and healthy way of thinking when it comes to investing, you made 17%. I know why I wrote 179. It's because I assumed you invested $1,000 into Apple. You don't need to track this specifically. You could buy even round amounts of dollars. And so, no, that's not what it is. Yes, that is what it is. Because that's 17%. Yes, that's exactly what it is. But also, I did the math and you're basically giving yourself a 10-minute, 20-second session for every $55 that you happen to invest into Apple. Now, imagine you invested, say, $10,000. That's a lot more than 10 minutes. But why is chasing reinforcement very dangerous here? Does anyone know? And is this even reinforcement? Right? Like we waited 6 months. You guys can speak into the microphone right now. Here, I'm passing it. Yeah, your voices. I want to hear your voices. Is this reinforcement? Just yes or no? Yes or no? You guys are thinking about it.
Yeah, isn't it delayed reinforcement?
You know, I would say that it's almost an oxymoron for reinforcement to be delayed, because reinforcement has to be immediate for it to really be potent, right? This is something beyond reinforcement. This is a reward, which I guess you can say it's delayed reinforcement. But yes, I think I like using the word reward, so we're not thinking about reinforcement here, because what is this going to reinforce? It's not going to reinforce you investing more. It's going to reinforce you logging onto your investing account and looking at the gains more, because that's the behavior that happened right before, right? So we want to think in rewards rather than in reinforcements, because reinforcements is usually the 60-second window right before. But chasing reinforcements is very dangerous, because look what we missed out on if we sold after 6 months. This is the past 5 years. You basically turned your $1,000 into 4.2K. That's pretty cool. It got a boost of 4.2K. That's 421%. And you got about 3.85 hours for each $55 invested if you make $55 an hour in your sessions. So that's pretty incredible, right? You only worked an hour and you basically times forward your time. This is not always going to happen. This is just an example. Please don't just buy Apple stock because you're seeing it here. But that lady right there is very, very happy. Very, very happy. And she's got a cool hat on, and I respect cool hats. Fun fact, my hat actually has a hole in it because I'm very frugal. That's not why. I'm just very lazy. But that's why I invest in stocks, because I want to make money the lazy way. Chapter 3, seek reinforcement from the stock market and get wrecked. I'm working on the title. Day traders. So some people buy stocks, sell stocks, and they're trying to get reinforced. The data says they'll end up ... There's a little bit to describe day traders. YOLO, gains bro. These are the finance bros. These are the people who wear the backwards hats. I wear backwards hats. They say, check out the chart, check out the chart. Look at the trend, look at the trend. I'm making 1% a day. By the way, 1% a day would triple your money, more than triple your money, would quadruple your money every single year. That does not happen with stocks. Oh, I shouldn't have said that. They always say, who wants $1 million at 60? And I'm like, I know a lot of 60-year-olds. I know a lot. Okay, so let me share this question. Hold on. There's a pop quiz coming on. Oh, you guys didn't tell me I had that pop quiz on your screen, huh? For a very long time. Oh, you dragged it out of the way? Okay. Okay. Here's my question for you guys. This is about trading stocks. So the average, for people who don't have the latest Zoom, this is saying the average day trader has made decent profits after the first year, has consistently beaten the market because they spend more time studying stock prices, ends up with negative within 5 years. About 1% of day traders win big during a 15-year period, and they tend to work way too hard. Wait, what? They tend to work way too hard to get too little compared to a passive investor, and choices 3 through 5 are all true. So about 53% of you have participated. So you guys are back in the shower. You guys are pooping again. That's okay. And I'm going to just end the poll because I think we're seeing a trend here. And I am going to share these results. So about 12% of you say they made decent profits after the first year. 12% said they end up with negative after the first 5 years. 50% of you said that they end up with negative within 5 years. About 1% of day traders win big after 15 years, and they tend to work really hard compared to the passive investor. So the truth is, they might have way more profits the first year, but the most correct answer for taking a BCBA exam is actually 3, 4, and 5 are all true. They almost all end up negative within the first 5 years. About 1% of day traders will have a big profit after a 15-year period, and they work very hard, waking up, if you're on the West Coast, at 6:30 in the morning, actually a little bit before, doing their research, looking at what's happening all across the world. But and even if they win, they tend to still underperform passive investors. Why? Well, they also have to pay heck of taxes, because when you just buy and sell stuff, that's income. And every time you make a trade, you are paying taxes on any profits. Luckily, most day traders are in the negative, and instead of having profits, they won't pay any taxes. They might actually lower their taxable bill. So having losses in your stocks is actually not a bad thing. It doesn't have to be. But the data does say from Charles Schwab, from Vanguard, from Fidelity, day traders don't do too well. And if you're a day trader and this is what you came for, I'm sorry for wasting your time. I'm sorry. So if it's not reinforcement, then what do we do? What do we do when something is not inherently reinforcing? For example, maybe like more teenagers, right? Teenagers have programs like this a lot of times. Like you're not going to be like, do your homework and then you get a cookie, right? Like homework takes a very long time. Maybe it's a whole like cleaning the room routine, then doing their homework, a whole entire chain. How the heck are we going to reinforce that? Like what do we do, right? Instead of just focusing on like, okay, let's reinforce this, we have to tell them something. We have to create something for them. Feel free, BCBAs, ABA people, type it in. What the heck do we do for people where immediate reinforcement is not always possible? Like we're trying to teach them, oh my gosh, Rosie, Rosie, I said stop. No, Rosie, you're on fire. Yes. So it is rule governed behavior. We use rule governed behavior, and that's what we need to do when it comes. Rosie, did you write these for me? You do need to use rule governed behavior for investing, because it's not about reinforcement. Maybe we can do a philosophical debate later, but I believe that reinforcement almost has no role in when it comes to actually getting returns from your investment, because sometimes it's 5 years later, 10 years later. We saw with the case of, I forgot her name, Sandy. I think this is Sandy over here. She waited 35 years. Now she could have had that money way sooner if she invested way harder, if she changed her lifestyle. It all depends on your personal preferences. Mine is, I want this by 2030. So I'm strategically living at home with my mama and investing everything that I can. I also have a side business on Instagram and all that, but actually most of my investments are from my 9-to-5 job. I would say 90 to 95% of everything you saw came from 9-to-5 life. Rosie the Ninja. Yes. So this is the kind of what she's doing here. If I invest 700 into stocks, I'll get my portfolio to fund my future vacations and pay for all of my groceries. Look how she's using her preferences. Instead of thinking about dollars, she's thinking about what those dollars are, because ultimately tokens are useless if all we value is the token, right? We don't want to just hoard tokens. We want things and stuff. So we could debate whether this is the true SD or not. I think that's a very tough and complicated thing. But for the sake of time, the SD is the amount, her knowing the amount of time needed to invest and having that time available. The time shows it's a signal. Reinforcement is available way down the line. So reward is available. Maybe this is more of an MO, but it does increase her investing behavior. But if she waits and invests 40 grand lump sum 20 years later, it's not going to be the same result, because time is a key component. And should I pay off my debt first? Negative versus positive reinforcement. So debt payoff, depending on the interest rate of your debt. A lot of people right now are about to be like, I was excited for a second. So if you have a huge amount of debt, it does not matter. What matters is, what is the percent interest you're paying? Right now, student loans are at 0% in the United States. So if you have credit card debt, like if you got like $2,000 or $10,000 on your credit card, and that is 16%, that is the equivalent of trying to get to the top of an escalator while it's going down, and you are crawling on your knees with your hands tied behind your back. So it's going to take a long time. You might get there. You might get there. Oh yeah, your feet are tied together too. So you really have to like lizard your way up. Investing on the that's negative reinforcement, by the way. You're throwing money in to get rid of something, which increases your behavior. It should increase your behavior over time. It doesn't have to, of paying off that bad debt. But investing is like running up an escalator while it's already going up. That's why we saw a $1.1 million difference between the saver and the investor a few slides back, because someone just took the stairs and walked slowly. And, stairs are healthy and all that, right? I'm ruining the metaphor. But running up the escalator will get you way, way faster because you're already going up. There's going to be bumps. Even if you trip and fall, because there's such thing as stock market crashes, you're still going to get there way faster than someone who is walking up 20 flights of steps. So it's okay to fall. You might even fall 6 times and you will still get there faster than someone walking up those stairs. So I hope that makes sense. Paying off debt can be very dangerous. And we will have a Q&A if you guys want to stay a little longer and we could talk all about this. Okay, so here we go. Chapter 4, facing fear and anxiety. So I don't mean to, I'm still working on these titles and I'm trying to be inclusive because I'm not trying to make light of anyone suffering from incredible fear and anxiety or even depression. But our clients do. A lot of our clients do on the daily, and we still create these plans for them to conquer these feelings, right? So we expose them little by little. So good job if you have extreme fear and anxiety with money and you're here, you're doing it. This is amazing, fantastic. Yeah, I definitely have some anxieties about money for sure. And like, I feel like I'm doing pretty great. My mom's like, I don't know how you're doing this. Like you're way younger than me. And basically my mom are like neck and neck with our net worths now. And she's like, how'd you do this? Now she knows it's all investing. Some people are hopping on right now because of that time difference. That's okay. So chapter 4, facing fear and anxiety. And if you are hopping on late, or if you're watching this on YouTube, you can watch this on YouTube eventually. So fact, the stock market is going to crash 100%. When is it going to happen? Well, let's check out some of these articles. The stock market is going to crash again. Catastrophic. Stock market crash isn't over. Here's how it could get much worse if it could get much worse. What? Much worse it could get. First, terrible news. The biggest stock market crash of our lifetime will hit in 2022. Harry Dent Jr., aka some tells Think Advisor in the interview. And then our favorite, Robert Kiyosaki, author of Rich Dad Poor Dad, which is a book that is kind of a staple in the personal finance space. Not everyone is a fan of Robert Kiyosaki because he says some kind of let's just say racist stuff. But anyways, that's Robert Kiyosaki. But that book, right? We separate the art from the artist a lot of times, or I mean, some people protest their favorite artist no matter what, I have a tough time listening to Chris Brown. I'm still trying to process all that. I know it's been a while, but and Rihanna just got pregnant and all that. Okay. So Robert Kiyosaki basically every single month writes a tweet like this: giant stock market crash coming in October. Why? And he has a reason. The truth is there's a lot of people that are profiting off stock market crashes, that are profiting off you not investing, you being afraid of investing. And I think this is just my conspiracy theory. If this was taught in public education, capitalism as we know it could not exist. We need people, if you're in the Illuminati like me, we need people to not believe that this works. That investing every single month, no matter what, no matter how scary it is, no matter how many times you're falling on the escalator, you need to believe that this is it. This is going to change the world forever. And actually, personal story, the $230,000 portfolio that I showed you, those stocks, when I reached my first $100,000, which was in 2019, after 4.5 years of investing, and it was all those little incremental $50, $200, $500, $1,000 that I was throwing in and increasing over time. That's what got me to the $100,000. It wasn't like, okay, now I'll make a whole bunch of money. Here's $40,000 invested in a single year. Like, that's not what does it. It's those little things that are in there over time. Now the $40,000 really helps. But those little things add up so much. And in 2020, COVID happened. Okay. COVID happened. Didn't want me telling secrets. And the stock market crashed about 34%, which means a third, right? My portfolio got a little bit disproportionately hit because I invest differently than the market itself. And we can always talk more about that. But I was down about $40,000 in about a week. So what did I do? My mom was like, hey, man, Joe Biden is coming in. Donald Trump is a goon. Like, I don't trust anybody right now. Things are changing. Stock market doesn't care because we are at an all-time high. We're 4% from an all-time high right now. Now, no one expected this. No one predicted this. The one thing that people did predict is eventually stock market will come back. So what are you going to do? Not going to invest when it's the best deals are right there. It's a Black Friday sale. Like, yeah, I'm going to buy whatever I can. But I'm not going to go all out, because if I go all out, that is still money controlling my behavior. I'm following my behavioral plan. I'm investing every month, no matter what. If the stock market crashes a certain percentage, I have a preset number in my head, rule governed behavior, and I will invest 50% more that month, and I will lower my emergency fund. I will use a month of it and throw it into the stock market during that month. And, that comes with some privilege and some planning, but the more you plan, the more privileged you will have. Okay. This is the stock market, by the way. This is what it looks like. These are all the terrible events that happened since the 1800s. And it basically goes straight up. Like, there are terrible events. But even in the Great Depression, there was a single month where stocks went up 50%. Imagine you missed that. There's actually a very famous statistic where if we got like a couple more slides here, guys, by the way. So we're pretty much done. We'll do the Q&A. If you're investing in the stock market and you miss the top 10 days, your investment returns are basically cut in half. So, and the top 10 best days, guess when they happen? They happen when the market is crashing. So usually when stocks go down the most, that is when statistically, there's an opportunity to see massive gains really, really quickly, but do not chase those. If you chase those, Peter Lynch, founder of Merrill Edge, if you're with Bank of America, Merrill Edge is their investing platform. He says, waiting for stock market crashes of 10% or more, costs investors more than actually being invested during that correction. So waiting for these opportunities costs more than simply tolerating it. Okay. You don't have to trust me on that. You could read plenty of books. I'll have some resources right now that you can look into and buy for yourselves and get into that. Okay. All right. Long-term investing. There's a 99.9% chance of having more money than you started with in a 20-year period. 20 years is a long time. Sure. But everyone here, if you don't invest, probably going to be working for 30, 40, 50, maybe even 70 years, depending on medicine, right? It's a very long time. And I love my job. Don't get me wrong. I love it. I love it so much. I love waking up and going to the clinic, not every day, but most days. I have a report to write this week and I'm avoiding it. I love assessments. I hate reports, but it's so much. And this is a big client. He has so many goals. He has like 35 goals right now. He's mastered. So that's a lot of paragraphs. I have to write a book for him. I just finished one too. Luckily, my clinical director, she doesn't use error correction on me. And I'm so grateful. She's like, you forgot the figure captions. And I'm like, no one cares. No one cares about figure captions. And she's like, I'll add them for you. She doesn't say it like that. She's like, I added them for you. Next time, remember, like 4 times now. I hope she doesn't change. Yeah, if you're investing for a long time, the odds are in your favor. Even if you're investing, I would say if you're investing for over 5 years, then you're in that more safer window, as long as you never stop contributing. That's the key here. I had so many messages during the pandemic on my Instagram. By the way, follow me on Instagram, follow me on YouTube, especially a lot of ABA content coming there, ABA and finance. It's financialism. You'll get emails. So brain fart. Nope, totally forgot what I was going to say. Yep, totally forgot. All right, let's move on. That happens sometimes. I think you guys got enough value so far. 5 years. Yeah, if you're investing for less than 5 years, you're going to have some trouble. There is ways to make money outside of a bank account, and we can talk about that in the Q&A. If you have less than a 5-year window, like if you're saving for a house and things like that, there's other strategies than the stock market. But if you're trying to live a work optional life, stock market is the way. And I think it's the only way. I'm biased. Okay, chapter 5. What do I do now? This is the last one. This will take about 2 minutes, and then we can do Q&A. Here, you were saying during the pandemic, you got a lot of messages. Thank you. Abril. Yes, got it. She showed me the thumbs up. She remembered my reinforcers. So Abril is saying, I got a lot of messages, and someone messaged me, should I stop contributing to my 401k? And I was like, you should be contributing more now, right? This is a time where you go harder. So right now in January, we had the market fall 11% at a certain point. It's back now, mostly. 2/3 of it is back. That was a great time to buy a little bit extra. I didn't, because that's not part of my plan. But when the market drops, you want to increase those contributions, especially if you're getting like an employer match, then that's just free money right there. You're printing money. That's why I have all those dollars right there. Okay, so this is one of the last slides here before I talk about resources that you can either invest in or free resources that could help you investing or getting started more. So this is a self-management and behavioral chain. This is my favorite part of ABA that I think is not optimized enough. And that's because a lot of our clients are on the younger side typically. But step one, you're going to make an M1 finance account. What the heck is an M1 finance account? This is US based, and you don't have to make an M1 finance account. It could be Fidelity. It could be Charles Schwab. It could be whatever you want. It could even be Robinhood, but M1 finance, I'll get to the Q&As. Some people are sending me direct messages and things like that. We will do a Q&A. So self-management and behavioral chains is in the very last section of the Pass the Big ABA book. If you guys got that, I'm not sure. I actually used my money from the company I work at, which is called Cortica, awesome company. I don't know if I work with any of you, but they give you like a $2,000 that you could spend on tuition and stuff. I spend mine on the Pass the Big ABA books, and I just like keep them in the clinic, and like people could use them. Save money, guys. If you're a BCBA, like definitely use that. If you're not like traveling for an event, you're not going to spend all $2,000. These are big companies. They make a lot of profit. I hope. Definitely use that money and get it for your RBTs who make significantly less, and create that library in your clinic. But make an M1 finance account. Don't do it now, because I'm going to send you an email right after this. And you're going to click that link. Why? Because I benefit. Okay. But you benefit too. I made sure that you benefit. When you deposit $100, we both get $50. This promotion is going to end. And that is not why I'm talking about M1 Finance. I am talking about it because it's actually a really great platform. I started to use it. If I was investing for the long run, starting today, I would start with M1 Finance. They have so many features, but I do have a video on my YouTube of a tutorial of how to use it. It's really simple. You could copy expert portfolio. You're going to get all the benefits in an email. But if you feel like this is shady or something like that, then don't do it. Don't do it. Don't trust people on the internet. Make your Charles Schwab account, make your Robinhood account, make your M1 Finance account without using my link, you scumbag. But either way, you are going to have an investing account within the next 24 hours. Why? Because latency is key. That is the #1 variable when it comes to investing. How soon do you start after getting the knowledge that, hey, this is something that works? Now, you may not know all the ins and outs, but at least make the account, right? Behavioral chains. For working out, you put the dumbbells on the floor in front of you the night before you're going to use them, because you have to walk around them in the morning. So you set up the behavioral chain first, and you do step 1. Then you do step 2, maybe a week from now. And I will send emails probably every 2 weeks or something like that. So make sure you got your notifications on and stuff like that. Follow me on Instagram and YouTube. You will create your pie. A pie is a yummy thing that you eat, but on M1 Finance, it is an allocation of stocks. And you can copy expert portfolios with a click of a button if you want to. I have my own. I can share those, not financial advice. You will set up automatic contributions. Automatic. Why? Because you want this hands off. You want money the lazy way. You don't want to be a day trader. Oh man, people hopping on right now because of that time difference. You're gonna record the behavior. You're gonna say, this is what I did. Why? Because recording behavior oftentimes increases behavior. And finally, you're gonna tell a friend, because hopefully that M1 Finance bonus is not up, and you will actually get now $100 in about 2 to 3 minutes of work. That's how long it takes to set up. Every investing account asks the same information. They're gonna say, what's your social security? People are gonna exit out. That's what happens. That's the way my mom was. But I was like, Mom, didn't you do it for your 401k and stuff? She said, oh yeah. It's the same people. Oh yeah. So you can't get around it. The government wants to track what you're doing. If you're making money in any way, they want to know. Okay. So it's going to ask how much you make, where you live, all that private information. And you are going to link your bank to M1 Finance, Charles Schwab, Robinhood, whatever it is, and it is protected. And even your stocks, like if they were to get hacked or something like that, Up to $500,000 is protected on M1 Finance. The same way, it's just through a different agency. Your money in the bank is FDIC insured. Stocks are also insured, but not from losing value. Only from like M1 Finance is going out of business. Up to $500,000 is protected. So I don't want, unless you have more than $500,000. That's why I think it's important to have multiple investing accounts. Okay, now I know some people joined in a little bit late because of the time difference, but you can watch this replay. It is being recorded. I hope it's being recorded, please. Yes. Okay. Don't forget to like, comment, and subscribe. So here are some free resources. Some of them are paid, and I'll tell you about more paid resources in a second. These are some great books. The Simple Path to Wealth by J.L. Collins, The Strategic Dividend Investor, The Intelligent Investor. Warren Buffett's teacher is Benjamin Graham. So everyone here heard of Warren Buffett. This is a thick book. A thick book. It's really thick. It goes into the nuance. I'm going to say that word one more time. Thick. It's thick. I have it behind me. I think that The Simple Path to Wealth is written in a very comfortable language. What I should do is have an Amazon affiliate link so I get $2 off every single. But anyways, here is an ABA Facebook group that I recently found. I don't know if we have any members from there. It's called Financial Flexibility, Finding FI, which is financial independence. Someone in the group told me, check out this podcast called Choose FI. I binged like 6 episodes. It's really, really great. And then my favorite is the Money Tree Investing podcast. I listened to 95% of the episodes, and this really helped me a lot, but it's going to take you a lot of time to sort through this information. Books take a long time too. And then there's the Behavioral Ladies podcast. Now I don't know if you guys know about them. Hopefully you do. They're really big in the ABA community, but your boy has an episode with them where I talk about investing. So check that out. It's a lot of fun. They're a lot of fun. And maybe you guys even found this through them because they gave me a shout out, and I was like, thank you guys. Thank you. I appreciate that. Now, I also have my own stuff, so I'm going to plug it right now, and I feel no shame plugging it because I believe in it, and I have over 100 students, and you will hear, or not hear, but you will see some of their stuff. So I created a whole course combining 6 years of investing knowledge into it, self-paced modules, kind of goofy, just like this workshop was, but it goes through all the nuances of investing. What are the nuances? Well, it talks about why investing, which is kind of what we did, what the stock market can do, my personal returns, pre-investing must-dos, what the fun are stocks. So we go a little bit deeper into it, like PE ratios, like all those little numbers, volume traded, why that matters, why it doesn't matters, making all sorts of accounts. So my goal is to make this course actually free because throughout the span of the year, I will be sending links through things like M1 Finance. That's one of my biggest hobbies. Charles Schwab, by the way, giving out $50 right now. I don't want to overwhelm people. That's why I spread it out throughout the course of a year. But I've probably given out hundreds of dollars. Multiple people messaged me and they said, bro, your whole course was free, not counting investing returns, because they actually click the links in my emails. Compound interest and how it works, the calculator, index funds, mutual funds, ETFs. How does that all work? Stock market crashes. We even have a deep dive into the Great Depression, which is my nerdy one. You don't need to watch this to be a great investor, but stocks crashed 80% during the Great Depression. And I do an analysis of the Great Depression through a 2008 lens, while being in the COVID pandemic when stocks are crashed. So I triple layered crashes, and I just love that. That's my gender studies in me that's coming out. I was sociology and I was also gender studies major. So I have to do that stuff. Buying videos, tutorials, how do you actually do it, individual stocks for a profit, my personal strategies over there, capital gains taxes, protecting your portfolio, tax deferred accounts, 401ks, IRAs, Roth IRAs, and all of that. How much money do we need to be financially independent, finding your retirement dollar amount, of course, the morals, the ethics, the good, the evil of investing. People got to think about that. There's brain fart. There's Zoom nights basically once a week. They're just like this, and we do it every Wednesday, and you basically have a year's access. That's just supplemental. That's just a bonus, but you go through the self-paced modules. Some people do it in Wait, what? Oh, there it is. There's the 1 year of Zooms. Yeah, so you can hop on and do 1 year of Zooms. That's a lot of fun. And here's just some people who've already taken it. And I promise I did not force them. I did not force them to write this. They volunteered. A lot of it was what's that word? Candid. So someone said, I just want to say that hour I spend in here every week when I can make it leaves me with such a high for the next days. I enjoy learning from everyone else. So we have a lot of things just like this, except everyone else talks. And sometimes they're very intimate. It's not like 40 people. Sometimes only 2 people come. Sometimes 15 people come if the stock market is not doing well. Yeah, someone said they're grateful for me putting the course together, and it puts everything in one spot. Again, you could also just read those books, but reading a book takes a long time. And this is designed to be bite-sized, quick, straight to the point. Let's go to the next chapter. And I'm also your lifelong, basically, as long as I'm alive, resource. So I don't know if anyone here is actually taking my course right now. I think a couple people wanted to join in, and they were saying like, yo, I could just send you a voice memo and you answer it. So yeah, I'm your financially savvy friend. And this is actually from a nurse. That's why I included this. So nurses work very, very tough, and they have like 3 days that they're just working nonstop and then they rest. So this nurse actually made the time to binge half of the course in one setting. And they were very, very excited about that. And they're saying I'm a lazy boy. All my money works for me, because I actually have rap songs. They're on Spotify, and those are some lyrics from those rap songs, and they're very good. I'm very proud of them too. But that's another Zoom workshop that we'll do one day. So with that, oh yeah, I did do an added reinforcer, because I realized some people were getting to like 80% of the modules completed, and I was like, okay, I want them to do the morals and ethics. So when you complete all of the modules, you don't have to do the bonus modules. You will also receive a recording of a crypto workshop. A lot of the behavioral principles are similar, but you need to know how crypto works and how to keep it safe. And again, Fidelity, Charles Schwab, they recommend that if you have crypto in your portfolio, it could just be 3% of all of your money, and it'll make a huge difference, or have the potential. So if it goes to 0, it's not a big deal. But some people want to go heavy on crypto. My mom uses crypto for passive income, and that's a lot of fun. So that will be just a bonus for people who sign up today. And if you guys want to take a screenshot of this, feel free to take a screenshot of this. But you'll get an email where you can go in. Matter of fact, I'm gonna take a little screenshot of this myself. Hold on, where's my phone? And then we can do our Q&A. Oh, Shannon's in here. So Shannon's actually, I promise you, I did not pay Shannon to say that. I did not pay her to say that. She's taking the stock market 101. She actually finished my course in like a weekend. So she went really, really, really hard in it. And I think she went through the crypto workshop as well. There it is. He did not pay me. So I did not pay her unless she clicked my M1 finance link. Then I did pay her. So I'm just going to take a little screenshot. She did both courses. So yes, I'm very proud of it. That's why people are like, don't you ever get like, when I started, they're like, don't you get shy of like talking about your stuff? I'm like, but it's great and it helps people. So no, I'm not. Okay, let's see. There we go. Oh, I'm not even in the picture, and it's all backwards, but okay. I don't do things perfect, but I do them. Awesome. So with that being said, oh yeah, the last poll question, and then we could do a Q&A here. So I'm going to share my final poll question. There we go. So this is asking, how do you feel now? And it's basically saying, I feel way better. You changed my life forever, blah, blah, blah. I feel about the same. Be honest, guys. I feel better about what's possible, but I still don't feel ready. And I'm buying books. I'm signing up for the course, blah, 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 blah. So I'm going to leave that up for a little while. But in the meantime, guys, we can start now asking any questions that you have. Just feel free. I'll reinforce the first one to say something out loud, and then I'll go through some of the private messages that I have received during this workshop. So go ahead, someone fight for the mic and just ask your questions.
So what's the difference between stocks, mutual funds, and ETF?
Yeah, so ETFs and mutual funds are combinations of stocks, right? That's all that it is. A mutual fund and an ETF, even though they're not completely interchangeable, result-wise, they might be. An ETF can track a sector, for example, just technology, and same thing with mutual funds. It could track a sector, like technology or something else, while a stock is an individual company. And that could be a lot more risky, but also a lot more rewarding. While an ETF is very rare for it to drop by 20% overnight, it is possible for a stock to do that. But the vice versa is also true. It's very rare for an ETF to just blow up 20% overnight. It does happen, but it's very, very, very rare. And that's the main difference between them. The other small nuance is mutual funds are bought after hours. So when the stock market is closed, that's when your order goes in. So if you're trying to like day trade or something like that, and you see an opportunity during the day, you are going to miss it with a mutual fund. But with an ETF, it trades just like a stock automatically. You put in your order, as long as the market is open, it goes through right away. So that is the main difference. Also, stocks don't have any fees associated with them, while mutual funds and ETFs do have management fees. And inside of your 401ks, you want to be very, very careful and make sure that the fees that you're paying are low, but sometimes you just don't have that option. But that's just something to look at. And the fee that you're looking for, I know you didn't ask this question, but I love this stuff. It's called an expense ratio. So that is the word that you would Google, or you can sign up to my course and it's all in one place. And you can find out more about how those work. So I hope that answered your question, Kristen.
Thanks, Georgie. It did.
Yay. So someone else here has a question from the chat. Let's see here. I can't copy it, but it was a private question from Lucia. I think I said that right. And she says, when you say investing every month, do you recommend investing in the same stocks? So first of all, I recommend nothing. This is not financial advice, but me personally, I do tend to buy the exact same funds every single month. Whether it's an ETF or a mutual fund, I tend to buy the same ones because I'm buying them because I believe in them. And timing matters a lot less when you're buying a conglomerate of stocks rather than one individual stock. And then the other question from them was your thoughts on insurance plan that has accumulated cash value and investing there. I think insurance is just insurance and it is not really for investing. I know some people have very strong opinions the other way around, but I'm not going to bag on anyone's get the bag strategies here, but I'm not a believer in using insurance to build wealth. I would rather use what insurance uses to build wealth, which is, stocks and stuff like that. And of course, your monthly payments. So I hope that answers that question. Who else has there are more private messages, but I want to reinforce another out loud question. So feel free to fight for the microphone. Here's the microphone right over here. Go for it. I challenge you guys to ask your question. I'm very patient. I'm a long-term investor. I'm good with silence.
I'm not sure if but is E-Trade the same as like an M1 Finance account?
Yeah, so they're very, very similar. Most investing platforms have more overlaps than they do differences. However, each investing platform does have something that the others don't. E-Trade, I believe, is used a lot for what's called options trading, and that's why it's called trading. It's not investing, but you can be a long-term investor on E-Trade and live a long and happy life and never have a complaint in your life. But I do like M1 Finance because with one click of a button, you can rebalance your portfolio. Like say you have a stock like Tesla in there and it's just too high up, you're no longer comfortable. Instead of clicking sell, you click rebalance and it falls back down to like 30% of your portfolio like you wanted it to be. And you can basically program that rule governed behavior into your M1 Finance quite easily. And again, I do have a tutorial on my YouTube. So that's a lot of fun there. So I hope that helps. Let me just.
Thank you.
Yeah. Let me share this poll, by the way. 96% of you answered, and it's pretty even across all the places. So that's pretty interesting to me. But I'm glad most people do feel better. I guess 4% who did not answer maybe don't feel too much better, and that's okay. That's okay. We're keeping it real here. We're keeping it real. Stop sharing that. There are a few other questions in here, so let's see here. Oh, Matos, I hope I'm saying that right. Celia, right? After I met you, I opened 3 accounts in Charles Schwab. It's so easy just to buy the stock slices. Yes, it is so easy. I believe, Celia, you are taking Stock Market 101. If I'm wrong, I'm wrong. But either way, it's really good to see you. I know I messaged you the other night.
I haven't taken it yet. I haven't taken it yet, but
One day.
I was just gonna say everything sometimes it's so confusing, but I was gonna ask you if I just keep buying every month, if I just keep buying stock slices in Charles Schwab, that's like the easiest thing for me to do. And I think I've mastered that skill so far. If I just keep doing that same thing for the next 20 years, do you think I have to learn something else?
So you are if you're buying slices, that's the Charles Schwab terminology for pieces of stocks. So instead of affording like the whole $3,000 Amazon share, you could put $5 into Amazon on Charles Schwab, and you could do that on M1 Finance. You could put $1 in, or a percentage in, which is cool too. So again, thinking of money in terms of dollars, in terms of percent, and in terms of time. If you are buying those slices, the danger lies that they are still individual stocks. And we saw Facebook the other day lose 1/5 of its price in a single day, which is actually equivalent, if we're thinking of it in time, more than a year's worth of returns wiped out in a single day. And that is a lot more rare. See you, Chris Brown. That is a lot more, they sent me a direct message. That is a lot more rare to happen with ETFs and mutual funds that follow the market. So yes, if you're just doing that, I'm a lot less worried for you than not doing anything at all. But I do believe that there are more strategies out there to learn. And I'm not just plugging my course or anything like that. You can buy books and stuff like that. But I do think you are on the tip of the iceberg here. And especially if you got kids, there's accounts for them that you probably want to learn about, so they can start investing today. And you can always private message me. I have a lot of free resources as well, but my course is gonna guide you through everything within a fraction of the time. So yeah, that's kind of my feedback there. I think it's a great start. And if it's your first year investing, like actively, then that's perfect. But by year 2, I would have even more strategies in place to create even more balance for your portfolio, because eventually there is going to be another crash. And you kind of want to know what to do during those crashes. Besides just buying stocks, it's buying certain sectors might be also be beneficial. It all depends on your preferences. And I want you to be very, very confident to the point where you don't even have to ask that question anymore. And you're like, I already know.
Okay, thank you.
Yeah. So let me back up for my some folks requested me to put what's that called? A syllabus. So this is my syllabus for the Stock Market 101 course. And again, I do try to make things as affordable as possible with especially the emails that you receive. And I had multiple members talk to me and they're like, all right, there you go. And I'll send you an email with more information. I just don't want to like be like, hey, this is about me, this is about my course. So yeah, but there will be an email where it is all about me and my course. So be ready for that. Oh, Celia, you asked the same question over here. I hope that's your name, right, Celia? Am I getting that right? I feel like it is, but
Yeah, I'm sorry, I'm the same person. It's the same person.
Okay, yeah. You're saying, can you do a Zoom about investing in crypto? So yeah, I did do that, and it's very nuanced, and it's not as fun for me. So I do charge for those events, but I do have a workshop that I completed with my friend who actually has a decent size of his net worth, over 6 figures invested in crypto. And we collaborated, and he actually guided me on my mom putting her money in safer crypto, such as stable coins, which does not go up or down in price, but it does pay a really nice interest. And she can basically pay for half the groceries off of that. But again, she did invest a decent size of I don't even call it investing when it comes to stable coins. It's more of a placeholder. And that's what I meant earlier for if you're saving for a down payment on a house, part of the money could go there. There are risks. There's risks with everything that makes you money in life. And even going to your job, you might, get stabbed one day. I had a kid point a knife at me before it happened. Do your homework. It's homework time. No, I'm not gonna do it. No, I'm not making light of that. I have to cope somehow. We made it past that. Yeah, he remembers and laughs at that. In a good way. Okay, are there any other questions about investing or getting started or anything like that?
I have a quick question. My name's Jesse, but I'm for some reason using my husband's account, so it says Brendan Coleman.
No worries.
So I have two questions. One, how do you have any feedback on a Fidelity account?
Yeah, so Fidelity is great. It's fantastic. I think they are one of the best platforms. I do prefer M1 Finance just because of the percentages. It looks like a pie. It looks very, very cool. Let me stop sharing my screen for a second. Maybe I could hop on real quick and show you M1 Finance. And I'll post the syllabus for the course back up if you guys are interested in that. But I'm gonna log on to my M1 Finance account, and I've been talking about it so much, I might as well show you guys why I'm so hype about it. Because compared to like Fidelity and Vanguard, it just looks very boring. Now, disclaimer: I use Merrill Edge, which is even more boring than Fidelity, and it's way worse than any of these platforms. And the reason I do is because I'm a behavior analyst, and I started with them, and there's a lot of data. And I don't want to like track it by hand because I used to do paper data, and they track everything for me, which is really cool. But investing there is not as convenient. You cannot buy partial shares or anything like that. And they do that on purpose to exclude people. Vanguard does the same thing, where if you want to automatically invest every single month, no matter what, on Vanguard, you need $3,000. Now, if you have $3,000 just to get started, good for you. But most people are not ready to do that or don't have that money. And that's why I don't really like talking about Vanguard. So do not copy any of these stocks, what you're looking at right now. This is just an example. Okay. This is just an example. Don't forget, you get free $50 for depositing $100. Just depositing. You don't have to invest it. You just deposit it. And in 31 days, if you're like, man, I don't want to invest, you could take out all $150. Just a free gift, 2 minutes to 3 minutes to sign up. So this is the way that it looks like, and it is all percentage-based visuals. It's really nice. It tells you your goals right here. So I have like a goal of Tesla being 15% here, and it's 14.6%. So it's going to prioritize filling in my Tesla stocks more than my Costco stocks, because Costco is at 29% compared to my 25% goal. And you can do, this is again just an example. This is a very dangerous portfolio. This thing swings like crazy. This is just for entertainment, educational purposes only, and kind of my YOLO fund. It's actually going to prioritize Facebook, buying more shares of that. They're, in my opinion, a little bit lower than they should be right now, but that's just my opinion. So if I put like $100 in, it's going to prioritize Facebook. And that's why it's so cool. It has a one-step rebalance button, which is awesome. And the most important thing right here is this auto invest. If you have this button on, let's just deposit some money. So don't look at my personal information. If you say you deposit like $150, you could do a switch to reoccurring schedule, and you could do it monthly, bi-weekly, week of the month, and it'll just do it for you. And you don't have to log in, especially if you have that auto invest on and you have selected your pies. So this is why I do prefer M1 Finance. It's way prettier than Fidelity, but with Fidelity, ultimately you can get the same features. Rosie says, I did the Schwab one you suggested. Oh my gosh, Rosie, I didn't realize, but you've been here for a while then. I used to talk about Charles Schwab all the time because I always talk about what pays you money, but Charles Schwab used to pay $100 for depositing $1,000. Right? So right now, this is an opportunity for $100 and 2 people get 50, and you could refer others. And it's very risk-free. Again, they do get your information, all that, but who doesn't have your information at this point? Like, I could buy your social security for $3 on the dark web. But that's a different TED Talk. Let me share my screen one more time. Okay. So any other question? Fidelity, by the way, was giving out $100 a few weeks ago for depositing 50. So I always look out for those types of deals, and I message people like that. And that's actually my way of reinforcing people for buying the course, where I'm like, my goal is to make that thing as free as possible for you, not including your investment returns over time. And again, the market could go down, but over time, There has been only one 20-year period in the last 100 years where stocks did not recover to where they were. But if you were buying the whole entire time, you were fine. Like if you were buying through all the terror, that's the cool thing about investing, in my opinion.
I did have one other question
Tell me.
about student loans.
Yeah.
What are your thoughts on, because I know you talked a little bit briefly about paying off debt.
Yeah. So when it comes to student loans, if it's at 0% student loans, that means essentially it's like no one wants to pay those off because it's at zero. But if you're just spending that money, if you're not putting it in a place where it can make more money, then I would just go ahead and pay them off, right? I would engage in like that negative reinforcement instead. But that's just my thoughts there. I would go hard if you're not investing, but if you're investing that money, that's different. If you're putting it into, say, stable coins, that's different. If you're churning it, right? Like churning is one of my hobbies, where you sign up for credit cards if you have a decent credit score, and you get sometimes $100, $200 as gifts. Making bank accounts, if you have like, say, 10,000 in savings, you could like open a Chase account and they will pay you like $500 if you keep your money there for 6 months. Like that's another thing you can do instead of throwing it all into your debt. But ultimately, I like positive reinforcement more than negative reinforcement. You know, I don't like working for things to be away from me. So I would prioritize investing personally. Hope that helps. Let's see, Natasha is saying, hey, Georgie, I have a Roth IRA and a standard investing account. Is there an ideal percentage for investing between the two? So the most that a person can contribute to their Roth IRA directly is $6,000 per year. But if they are over the age of 50, then it's $7,000 per year. One crucial mistake that people make with their Roth IRA is they put the cash in there and they walk away. It's not invested. It's just sitting in cash. So you must actually log on to the account and click the buttons and make sure you're buying either mutual funds, ETFs, stocks, and things like that. So the cool thing about the Roth IRA, and you learn way more about it in my course, is the money that you get is 100% tax free. Natasha, you're taking my course. I promise I did not pay Natasha to say that. I promise you guys, I did not pay her. So yes, I'm so happy you learned a lot, but yes, it is going to be tax-free money. It is the generational wealth builder, and you don't have to pull that money out. So if you have $10 million in there, you could just leave it there for the next gen. So it's pretty cool stuff there. Rosie is saying SoFi goes hard on giving money out too. Yep. SoFi is another platform. I actually have a bonus referral guide in the link in my bio on my Instagram. And for a family of 2, if you click through all that, you'll get like $700 within an hour. Like you're not going to pay the $700, but they are going to come to you within the span of like a month or 2, and it'll just be passively coming to you. So make sure you make those accounts and deposit what you need to deposit. And it's a really cool hobby to have because it actually reinforces you pretty well. You get a lot of moolah. So I do that. And it's for a very short response cost. What's the word? Response effort. Very low response effort. Takes 2 minutes of time to make, for example, an M1 Finance account. Deposit $100 takes another 2 minutes, and you're done. 4 minutes, you just made $50. That's a session after taxes for some of us. So, okay, let's see. Any other questions? Feel free to ask. I will be here for another 5 minutes. I think is good, and then we can. I'm gonna try to save this and then upload it to YouTube, which will take me about, I think, 24 hours to do. It takes a while. And hopefully you can watch it there and subscribe for more fun. There's going to be a lot more ABA content in there. So I hope that does
I have a
help.
question.
Yeah, let me know. What you got?
So back to Natasha's question. So if you have a Roth IRA, should you like max that out, and then anything extra that you wanted to invest, then you would do it into like a standard investment account?
So it's a lot like going to the gym, and trying to get the perfect body. First of all, if you're investing, you're already at the gym, you're doing great, right? And I mean, the gym alone won't give you a perfect body, but it's food and other stuff. So investing alone isn't going to make you financially healthy. There's a budgeting and other stuff as well, understanding crypto and all that. But different strokes for different folks. Some people want the most amount of money possible in their lifetime. So they are prioritizing putting whatever they can into the Roth IRA, up to $6,000 per year currently, $7,000 if you're over 50, and they go with that because they will never pay taxes on that. But me, I want a work optional life sooner than age 59 and a half when you can pull out from the Roth IRA. Because knock on wood, hopefully I'll be here for a long time and a good time. But I do want that money sooner. And there are ways to live off of your investments before that, frugally, paying zero taxes, but those laws can change. Tax laws change. With the Roth IRA is not just a protection against those laws changing. It is the least likely account to get targeted with laws changing. 401k, those laws can change. Brokerage accounts, those laws can change. You might get taxed more one day on your profits. But Roth IRA, man, that candidate, that political party, they are cursed for the next 100 years if they touch the Roth IRA. The Roth IRA is here to protect wealth and to make sure that there is at least one way where you don't have to pay taxes on your money. Now, remember, a lot of people say, don't you pay taxes before you invest in the Roth IRA? But yeah, that's every dollar. Right? When you get $1 from your work, you pay taxes on that dollar. That's the same dollar you put into your Roth IRA. You can make a Roth IRA through Fidelity, through Charles Schwab, M1 Finance. But if you're trying to get that $50 bonus on M1 Finance, you need to deposit $500 into the Roth IRA, while in a regular brokerage account, you just deposit $100 into it to get the $50 bonus. I hope that makes sense. Personally, what I do is I maxed out the Roth IRA 2 years in a row. And I'm like, you know what, maybe I'll do one more year or come back to it a little later because I'm prioritizing money by the year 2030. And I plan to live very frugally, and plans change. Eisenhower said that plans are useless. Planning is everything. So being able to adapt, like what if I have a child born, they're on the spectrum, that my money plans are going to change, right? I'm going to think differently. Or if my child has other special needs, like forget all this, not necessarily forget all this, but like I'm going to delay it by a few years and prioritize that. So be ready to be flexible because laws change, and so does life. But I am prioritizing my taxable brokerage account because currently, if you make your income $40,000 or less, like you stop working, you can withdraw that much tax-free in profits from your stocks, which is awesome. And then if you're married, it doubles. So that's pretty good. I got to get married quick. So Lauren's saying, is it advantageous to open up multiple accounts? Yes. For example, I have a Robinhood account and a Roth IRA with Charles Schwab. Would it be ideal to open an M1 Finance account also? Yes, it would be ideal. Why? Well, first of all, behavior momentum, right? And you're getting reinforced for it. I open up all the accounts because I love the bonuses. For example, there's a Webull promotion right now. If you sign up to Webull, you get like 6 free stocks. That takes a minute to do. And there's a link in my bio to my referral guide where you could click that link. We both get those stocks, which is awesome. Now, that's not the only reason. Like those bonuses add up. But if you think about it, M1 Finance, if you're putting $100 in M1 Finance and you're getting $50 as a gift, that's 50% returns. 50% is about 4 to 6 years of investing that $100 time travels through. So it helps change your mindset about how money really works. And again, hopefully you guys are going to start thinking of it instead of dollars. You're going to start thinking of it in terms of percent and in terms of time. So I'm thinking I put this $100 in M1 Finance and I'm getting about 5-6 years out of it for that $100 specifically. And that's going to teach me to look for those opportunities. However, the other reason is there's limits on how much money is protected in these types of accounts. If they get hacked or go under, very unlikely. But that's another thing that you want to consider. M1 Finance protects up to $500,000. So maybe you have one account and another account and another account. And they all have like eventually in like 15, 20 years, maybe $1 million each or $500,000 each or $250,000 or 100K each, whatever your goal is. By the way, if you have $100,000 in your accounts, you can withdraw enough to fund a free trip every single year for the rest of your lives. And that money will regenerate. It's just another way of thinking about investing. So remember, it's not just about the token, it's about what those tokens can access. But the other reason to have multiple accounts is accounts do go down. Robinhood was down. Remember I talked about stock market crashes. Usually when the stocks dip a lot, in the next couple days, there's a huge surge. Not always, but usually. And Robinhood was down during one of those surges. So people who wanted to get in at the top of the morning, they couldn't. But if they had another account, they could. Also behaviorally, when the stock market was crashing during COVID, it really hurt to log on to my main account. So I actually logged on instead of Merrill Edge. I logged on Charles Schwab because I didn't have to see what was happening. So there are many advantages to having multiple accounts. And my mom's always like, man, I have like 8 accounts. I hate this. And I'm like, Mom, you have an extra $10,000 because you have those accounts. And she's like, people are more, we remember punishment, positive punishment, and negative punishment way more than we appreciate positive reinforcement. Right. So that's why I will always seek out positive reinforcement because it leads to a more fulfilling life. So yeah, make every account that you can make, and especially because the response effort and the duration to make them is so short. Good question, Lauren. Good question. Any other questions that you guys have? Don't forget to sign up for Stock Market 101. You will get a DM, a message inside of your emails within probably the next 30 minutes. And there will be a cool little coupon code. You could click that, go through it, and it'll be a fun time. And I think different people get different things from the course. Like some people just go for the modules and they never show up on a Wednesday unless the stock market is crashing. But you can show up on Wednesday evenings, and some people only choose to do that. And I'm not going to kick you off after a year. I have people who still come on after a whole year passed, and I'm like, hey, what's up? Because we get to know each other quite a bit and talk a lot about stocks. I show my personal portfolio and go through it. We analyze stuff and get really into the nerdy stuff, talk about news, stocks crashing and things like that, what moves we're making. People say, well, let's analyze this stock, let's take a look at it. But ultimately, the modules do teach you about the lazy way to investing, where you just log on and automate everything and log off. And you check again, maybe in a year, just to make sure all the buttons are still clicked, and then you log off for another year. So that's, women actually tend to outperform males when it comes to investing because they do just that. They tend to do just that, is automate their investments. And they have slightly higher returns than their male counterparts, which is a cool fact. Just wanted you guys to know that. Automation is data, like there's a lot of data supporting that. And there seems to be a slight gender bias towards women doing that more often than men, who are like, I'm going to beat the market. I'm going to hop on. I'm going to sell Facebook right before it crashes. And I'm going to buy Snapchat because it also crashed, but it's going to go up like 55% because I'm psychic and I know this. I happen to have both Facebook and Snapchat and experienced 1/5 of Facebook disappearing in value. And then Snapchat will basically 50% in a single day, unheard of, unreal. But that's why my portfolio is a little bit different than your typical portfolio, but it is becoming more and more conservative with every year that passes. It's a lot, but I think this is a cusp. Once you learn this, you just look at the world differently. When you're walking through the mall, you don't see stores anymore. You see ticker symbols. Okay. And you look at money as time. I think that's another big one. Kristen is saying, thank you so much. The information is sharing. You shouldn't have. I appreciate the love, the reinforcement. It goes a long way with me. Really, I like praise. Yes. Oh, thank you. Oh, yeah. See the smile? I can't, that's just a response. I'm not trying. But definitely keep up with me on YouTube and stuff like that. Check your emails. I know it's a little bit spammy these last 24 hours, but I know people miss it, and they're like, oh, what happened? I missed it. Can you do it again? This is my second time doing this, and it's different than the first time that I did this. So I focus on different ABA concepts. I think it's infinite what you could do with ABA. Hopefully I could go speak at one of those events. That would be so cool because we need all BCBAs investing because I know how it is. I know how it is. We cannot work forever. We need our tokens working for us. I just spit all over my computer. I don't know if you guys saw that. All right, I shouldn't have said that. Okay, any final questions? I can take one more question if there's one more question. And if not, we can peace out. You guys look at your emails, sign up for my investing course, buy those books, Financialism at ABAI. Oh, Rosie, if we ever meet in person, we got a hug, even if it's COVID. I don't care. I'll get sick. I'll get sick with you. Okay, so anyways, I think we're good here. Feel free to DM me if you were shy to ask any questions. Feel free to send me a message on Instagram anytime. I prefer Instagram over email, but I'm okay with email as well. Don't forget to follow your boy on YouTube as well. Lots of content coming over there. And Spotify, if you are really curious about the way that I rap, go on Spotify and type in Financialism. There's a song called To the Moon and Lazy Boy. And yes, they all have to do with stocks. I promise you're not going to cringe. I promise. I started rapping at 2015 with my little recording area over there. I'm ready to go at all times. So with that, guys, I was going to try to say all of your names out loud, but that is a lot of names. And hopefully it'll get Abril. I'm sorry. I tried. Amber, Shemek, Ashley, Francisco, Mary, Joanna, Shantae Gold, Katie, Thomas, Barbara, Candace, Michelle. Now I feel bad if I miss someone. Rosie, Amara, Matos, Candace. Did I say Candace twice? Thomas again, Barbara, Abram, E. I don't know who E is. Natasha, Lauren, Shannon, of course. I think that's it. Ashley, Shemek, Amber. Yep, we got them all. Okay, awesome. Guys, I will see you guys on the internet. Keep up on Instagram. I do Instagram lives pretty much every single week, so feel free to hop on there. Sign up for the course, guys. I promise I'm a great resource to have and a good financial savvy friend to be rooting for you the whole way. With that, peace out. I'm out. See you guys on the other side. Stop, share, exit. Goodbye.